So you're working 50 hours a week. You're hustling. You pick up overtime when you can. You got a side gig on weekends. You're doing everything you're supposed to do. And at the end of the month, after rent, groceries, car payment, insurance, and keeping the lights on, you've got $200 left. You feel like you're running as fast as you can, but you're still in the exact same place you were 5 years ago. Same apartment, same stress level, same checking account balance bouncing between $800 and $1,200. You see other people, people who don't seem to work any harder than you, and somehow they're buying houses, taking vacations, talking about retirement, and you're wondering, what am I missing? What do they know that I don't? Here's what they know: trading time for money will keep you poor forever. The only way out is owning things that make money while you sleep. And I'm going to show you exactly how to do it, even when you're barely getting by. Hi there, my name is Dan, and I spend way too much time thinking about why people can work their entire lives and still die broke while others build generational wealth doing less. If you're someone who's stuck in the cycle of working hard, but never getting ahead financially, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Here's what most people don't realize: there are only two ways to make money in this world. You either sell your time or you own assets that produce income. Workers sell time. You work 40 hours, you get paid for 40 hours. You're sick for a week, you lose a week's pay. You want more money, you work more hours. There's a ceiling on how much you can earn because there are only 168 hours in a week. Owners own assets. They own stocks that pay dividends while they sleep. They own rental properties that generate rent every month. They own businesses that employees run. They own intellectual property that pays royalties. There's no ceiling because assets can work 24/7. According to the Federal Reserve's Survey of Consumer Finances, 89% of millionaires own income-producing assets. Meanwhile, 73% of people living paycheck to paycheck own zero assets beyond maybe a car that's depreciating. The difference isn't luck. It's not intelligence. It's not even starting capital. The difference is understanding that you can't work your way to wealth. You can only own your way to wealth. And the cruel irony? The people who need assets most, poor people, are the ones least likely to buy them because they think assets are for people with money. Let me show you why working harder doesn't work. Person A, the hard worker, makes $45,000 per year, $22 per hour. Works 50 hours per week, 10 hours overtime at time and a half. Takes home about $3,100 per month after taxes. Expenses, $2,900 per month. Saves, $200 per month in a savings account at 0.5% interest. After 30 years, $78,000 saved. That's it. 3 decades of grinding, working 50-hour weeks, sacrificing time with family, destroying their body and mental health, and they have $78,000. That's not enough to retire on. That's not generational wealth. That's barely enough to survive for 3 years if they stop working. Now let's look at person B, the asset builder. Also makes $45,000 per year. Works 40 hours per week, no overtime. Takes home $2,750 per month after taxes. Expenses, $2,400 per month. Lives cheaper than person A. Invests, $350 per month in index funds at 8% average return. After 30 years, $490,000 in assets. Same starting income. Person B actually earned less total money because they didn't work overtime. But person B has $490,000, while person A has $78,000. The difference? Person A bought stuff and saved cash. Person B bought assets. This is where it gets really interesting. That $490,000 generates about $19,600 per year in passive income at a 4% withdrawal rate. That's $1,633 per month. Person B doesn't have to work for. Person A still has to work full-time at 65. Person B can retire or work part-time doing something they actually enjoy. Now you might be thinking, but Dan, I can't invest $350 per month. I'm barely making it. I get it, but here's the thing. You don't start at $350 per month. You start with whatever you can, and you build a ladder one rung at a time. Rung 1 Employer 401k match, $0 to $100 per month. If your employer offers a 401k match and you're not taking it, you're literally refusing free money. If they match 50% up to 6% of your salary and you make $45,000, that's a $2,700 annual match. You put in $225 per month, they add $113. That's a 50% instant return before any market gains. There is no better investment on earth. According to Vanguard, 21% of employees don't contribute enough to get the full match. That's refusing a $2,700 raise. Rung 2, Roth IRA, $100 to $150 per month. Open a Roth IRA and invest in a target date fund or total market index. Starting with even $50 per month, at $100 per month for 30 years at 8%, that's $149,000. All tax-free when you withdraw it in retirement. Rung 3, taxable brokerage account, $50 plus per month. After you've maxed the tax-advantaged accounts, everything else goes into a regular brokerage account, buying index funds. This money is accessible if needed, but it's growing at 8 to 10% instead of rotting in a savings account at 0.5%. Rung 4, real estate. When you have 10 to 20% down. Once you've built up some assets, you can use them as collateral to buy real estate. A duplex where you live in one side and rent the other. Or a rental property that generates monthly cash flow. According to the National Association of Realtors, 90% of millionaires own real estate. Not because real estate is magic, but because it's a tangible asset that produces income and appreciates over time. Look, here's the uncomfortable truth. Most poor people stay poor because they spend like rich people while rich people spend like poor people. According to research from Thomas Stanley's The Millionaire Next Door, the average millionaire drives a car that's 4 years old. They live in middle-class neighborhoods. They spend less than $50 on a haircut. They don't buy designer clothes. 80% are first-generation wealthy. They built it themselves. Meanwhile, according to the Federal Reserve, Americans spend $1.2 trillion annually on non-essential goods. The average person spends $18,000 per year on things they don't need. 64% of Americans spend money they don't have to impress people they don't like. Here's a concrete example. Let's say you spend $200 per month on eating out, $150 per month on subscription services, streaming, apps, etc., $100 per month on clothes and shopping, $80 per month on vaping or cigarettes or energy drinks. That's $530 per month on consumption. If you cut that in half and invested $265 per month instead, in 30 years at 8%, you'd have $393,000. You're trading $393,000 in future wealth for temporary comfort today, and then wondering why you can't get ahead. This is where it gets really interesting. The reason poor people don't invest isn't just lack of money. It's a completely different psychology around money. Scarcity mindset. When you're poor, money feels scarce. Every dollar feels like it might be the last one. So you either hoard it in a savings account, earning nothing, or you spend it immediately to feel better about being broke. According to research from Princeton, financial scarcity reduces cognitive bandwidth by 13 IQ points. You literally can't think clearly about long-term planning when you're stressed about making rent. Present bias. Psychologists have found that humans value immediate rewards about 2.5 times more than future rewards. $100 today feels better than $250 in 5 years, even though $250 is objectively more valuable. For poor people, this bias is even stronger because the present is painful. You want relief now. Investing for a future 30 years away feels impossible when you're struggling today. Learned helplessness. When you've tried to get ahead and failed repeatedly, you stop believing it's possible. You think, rich people have advantages I'll never have. The system is rigged. Why bother? And you know what? The system is rigged. But assets are the one part of the system that works for everyone equally. A share of an S&P 500 index fund grows at 8 to 10%, whether you're a CEO or a cashier. Here's the mental shift that changes everything. Stop thinking about money as something to spend or save. Start thinking about money as soldiers in an army. Every dollar is a soldier. You can send them out to die, spending on consumption. You can keep them in the barracks doing nothing, savings account, or you can send them out to conquer territory and bring back more soldiers, investing in assets. When you buy a coffee, you didn't spend $5. You killed a soldier that could have become $47 in 30 years. When you invest $5, you didn't lose $5. You sent out a soldier that's going to bring back 9 more soldiers over time. This shift from consumer to investor is how you break generational poverty. All right, here's exactly what you do if you're struggling financially but you're serious about building assets. Step 1. Track every dollar for 30 days. You can't optimize what you don't measure. According to Mint, people who track spending for 30 days find an average of $400 per month in wasteful spending they didn't realize was happening. Step 2. Cut consumption by 20%. Not 50%, not stop enjoying life, just 20%. That's one less food delivery per week. Cancel 2 subscriptions. Buy less crap on Amazon. Make coffee at home 3 days a week instead of 7. For someone spending $2,500 per month, 20% is $500. That's your asset buying money. Step 3, start with employer match if available. Contribute enough to get the full match. That's priority number 1. Step 4, open a Roth IRA. Fidelity, Schwab, Vanguard, doesn't matter. Set up automatic $50 to $100 per month transfers. Buy a target date fund or total stock market index fund. Step 5, increase by $25 every quarter. Don't wait to have more money. You never will. Instead, increase your monthly investment by $25 every 3 months. Quarter 1, $100 per month. Quarter 2, $125 per month. Quarter 3, $150 per month. Quarter 4, $175 per month. By year's end, you're investing $175 per month, a 75% increase that happened gradually. Step 6, never touch it. The market will crash. You'll be tempted to sell? Don't. According to JP Morgan, if you stayed invested in the S&P 500 from 2000 to 2020 but missed just the 10 best days, your returns dropped by 50%. Time in the market beats timing the market. Every single time. Here's what nobody tells you. Working hard is not a wealth-building strategy. It's a survival strategy. If you want to survive, work hard and save money. If you want to build wealth, buy assets. According to the IRS, only 3% of Americans have a net worth over $1 million. But 88% of those millionaires got there by investing in stocks, real estate, or businesses. Not by working harder or getting lucky. By owning things that appreciate and produce income. You can work 80-hour weeks for the next 30 years and retire broke. Or you can work 40-hour weeks, invest $200 per month, and retire with $300,000 plus. Same amount of time alive. Completely different outcomes. The only difference is whether you bought assets or bought stuff. And here's the really uncomfortable part. If you're poor and you're not buying assets, you're not just staying poor, you're guaranteeing your kids will be poor too. Generational wealth isn't about passing down a trust fund. It's about teaching your kids that money is for buying assets, not consumption. That compound interest is the only legal way to get rich slowly. That owning beats working. So here's what you're going to do this week. Day 1. Download a spending tracker. Track everything for 7 days. Day 2. Calculate your monthly wasteful spending. Be honest. Day 3. Open a Roth IRA if you don't have one. It takes 15 minutes. Day 4. Set up automatic monthly transfers, even if it's just $25. Day 5. Buy your first index fund, VTI, VTSAX, or a target date fund. Day 6. Tell someone you're doing this. Accountability matters. Day 7. Review your employer 401k. Are you getting the full match? You're not building wealth this week. You're building the habit that builds wealth over decades. Hit that subscribe button if this changed how you think about money. Drop a comment telling me how much you're committing to invest monthly. And share this with someone who's working hard but still struggling financially. Assets are the only way out. Everything else is just running faster on the same treadmill. Start buying assets today. Start small, but start. I'm Dan, and I'll see you in the next one.